Good afternoon. Good afternoon, everybody. Welcome to Paul's Monday Market Update, number 223 for Monday, 27th of April, 2026. Hope you're all well. Hope you've had a good weekend. Hope you're ready for another eventful week in markets. It really has been quite some year, hasn't it, so far? Anyway, you're very welcome here. If you're joining us for the first time, the Monday Market Update is just that. It is me flying through as much as I can share with you in the next 30 minutes, taking a look at strength and weakness within FX indices and commodities markets, looking at some charts of interest, okay, that you might want to add to your watch list, and then a look at the live markets. It is not a signal service. It's not trade recommendations. It is just me sharing with you what I'm looking at the moment, which might be of relevance or of interest to yourselves. As always, you're very welcome here, but just remember that you're always responsible for your own trading and investing decisions. And if you want a little bit more education this afternoon, I'll be running the Active Trades Monday Market Matters webinar. You can register for that on their website, or that QR code will take you there. The educational piece today will focus on trading the inside bar pattern. And if you're looking for a little bit of help and support with your own trading journey, and you could do with a little bit of discipline, accountability, and consistency, well, you can join the VTP tag group, the Trader Accountability Group. There's a bit.ly code there or a QR code there, or you can ping me if you want a little bit more insight into that. Okay, all right, so let's dig into the data. What is all this? What's it telling us? How's it going to help us? Well, what this is snips out of my own model, out of the work I do at the weekend called the STAM, where I'm looking to identify strength, trend, and momentum primarily within FX markets, but also in indices and commodities markets. And I do that because I find when I have a good handle on it, that helps me make the most of my time, energy, and resources for the week ahead. So what's this telling us? How do we utilize it? How can we utilize it to help us this week? Well, we are into week 18 of the year, okay, 27th of April, and just a little bit of housekeeping that we will not be here next Monday because it's a bank holiday in the UK, but we will be here back in 2 weeks' time on that. Is that the 11th of May, I think? But anyway, there we go. It's week 18 of this year so far. Where's the strength? Where's the weakness? Well, what we have here is in terms of strength, well, we've got the Aussie dollar there, okay, back on holding its forte. That is probably a little bit of an indication of the sort of overall kind of risk-on mentality that we have at the moment. Interestingly, we also have sterling here, okay, in second place, and sterling has been a bit of a sort of a strange old currency, okay, because some of the economic data has been okay, he says, in inverted commas, but some of it has also been a little bit weak. Furthermore, what we've also got is, of course, we've got all that kind of political shenanigans that are going on at the moment. There's more of that today and this week. And all of that kind of weighs on sentiment, all right, towards sterling and the UK in general. But then, of course, what we also have is that overall sort of end of the war risk-on mentality, rightly or wrongly, that is also pervading, and that is having a knock-on impact to US dollar, and we'll talk about that more in a moment. We also have this week, and it is a big week generally. It's a big week for earnings, and it is a big week for economic data. We've got quite a few central bankers speaking this week. So we are supposed to have Bank of Japan tomorrow. Then, of course, we'll have the Canadians, Bank of Canada on Wednesday, and then also FOMC, the Americans, on Wednesday evening. Then we have UK, okay, midday on Thursday, and also the Europeans on Thursday as well. So lots of central bankers speaking this week, but at this moment, nobody's really expecting any kind of major change. I think more people will be intrigued to sort of see the central bankers talk about how they plan to deal with the overhang of the threat of inflation due to the war in the Gulf. But as I said, all of that has kind of led to a charmed life, shall we say, for sterling. Sterling's holding its way up there in second place. And you know, if I look at here how the FX markets have been since they opened, okay, on since they opened last night? Well, invariably what we have seen is basically Kiwi, Aussie, Canadian, Sterling, Euro. They have all been stronger versus the dollar since market opened. That is an indication of that kind of war off, risk on mentality. There's talks today about how the Iranians have sort of offered some ideas or some a new proposal for reopening the Strait of Hormuz. And I think it just generally adds into that kind of people's view is that the war will end at some point, and people are sort of kind of generally optimistic, rightly or wrongly, optimistic about that, and that's reflected, as I said. All of those kind of risk on currencies have done well to the start of this week. When we look at that strength and weakness, we've just looked there. Where's the strength or where's the weakness? Japanese yen, okay, remains weak, as does US dollar, okay, and US dollar weakened again overnight, and we'll look at that in a moment on the live charts once again because of that war-off risk-on mentality, okay. That invariably means a dollar sell-off, all right, as part of that, and we'll look at that in a moment. And as I said, that's had its knock-on impact across most of those other currencies versus the US dollar. Canadian dollar holds its place in third, and then we have kind of euro in fourth, Swiss franc in fifth. It kind of rolled over a little bit on the daily charts. Kiwi down in sixth. So no real massive changes or massive surprises there. I think what will be interesting is to see how are these markets at the end of this week after we have more of the, let's say, the conversation about the, let's say, the sort of directory of travel for the sort of war in the Gulf. Okay, is that ceasefire going to be extended, or will it go deeper into a peace deal of some sort? You then have got those central bankers speaking, and as I said, nobody's forecasting any cuts this week or cuts or hikes this week, but invariably people will want to see what those central bankers have got to say for themselves. And then we have, as I said, we have a real kind of it's a big week for US earnings. All right. So last week we talked a lot about how quite a lot of defense companies had their earnings reports, and there's some interesting data there, interesting moves. This week we've got some really big US earnings data. So we've got kind of probably Wednesday evening is the sort of after the close is big, especially at the same time as FOMC. You've got Microsoft, Amazon, Meta, Google, Ford, Qualcomm, okay. Thursday after, you're going to have Apple, you're going to have SanDisk, okay, as well. Tuesday night, you've got Hood, you've got Visa, Robinhood, you've got Visa, etc. And a whole host of others. It's a really busy week. So there's an awful lot of information that's going to be coming out this week. And as I said, I'll be fascinated to see how these markets, how the weekly charts finish up at the end of the week. Certainly, when I look at the indices there, okay, under my own model, well, what a shocker. What we can see is that basically all of those major US indices and also the DAX and also the Nikkei, they are all in STAM 1 Bravo. They are a strategic buy, okay, back into there. But also interestingly, what we also had was, and this was a recurring theme across lots of the charts. As I say, I look at the weekly charts on a Saturday morning and go through them. There's an awful lot of spinning tops, an awful lot of indecision candles, of quite a few dojis, all right? Almost as if everybody sort of just, yanked in the reins before this week because there are so many moving parts that we're expecting sort of feedback and information through as this week goes on. So, as I said, looking at those weekly charts, lots of indecision, lots of spinning top, almost as if everybody's just waiting for this data to come out this week. And then, as I said, I'll be intrigued to see what these weekly charts look like by the end of the week. And we'll look at those in a little bit in a moment. Okay, we'll look at the live markets, but what we also even said, even Bitcoin has gone a little bit what I call tactical bullish there. Okay, and interestingly, on those FX pairs, there's an awful lot of green there, okay? Sterling and Euro pairs, there's an awful lot of tactical and strategic buys there, as are there some for some of those Aussie pairs, which is perhaps not a massive shock when Aussie has kind of regained the top of the STAM, all right? As I said, it's just reflecting that kind of war-off risk-on mentality. If I just back that up with just the latest plugin, so this is a plugin that goes into MetaTrader platform that people on the VTP stage 2 have. It's just once again automatically updating to look at where's the strength, where's the weakness, and it's just reflecting really what we've just talked about. The Aussie there, okay, is in the strong place. Canadian dollar, okay, is in second because of the strength in the 4-hour chart, with sterling in third. Okay, so no real massive major shocks or changes there. And as we said, Japanese yen and US dollar, okay, are just still sat at the bottom of the pile. But those of you join us on a regular basis, as I say, when I look at the STAM, when you're at the top of the pile, the only way is down, and when you're at the bottom of the pile, the only way is up. Okay, so watching those shifting sands is something that's pretty relevant to me, as you can probably understand. Okay, so there you go. So there's a little bit of look at the STAM and look at the sort of strength and weakness in FX indices and commodities. Let's now switch across to the live market to start to have a little look at a few charts of interest. So if you'll just bear with me for a moment, I'm just going to switch across to the other platforms and start the rest of our review. Okay, so here we go, the charts of interest. So these are just effectively normally weekly charts, okay, simple weekly charts with blue 20, red 50 and green 200 period moving averages on there that are just used to sort of look at charts of interest that you might want to add to your watch list. Maybe the price action is fantastic and you can learn something from it, or perhaps, as we said, we're going into earnings week and it'd be intriguing to see how it plays out. So first one, Meta, Facebook, call it what you will. As I said, they've got their earnings on Wednesday afternoon, and the recent price action has been pretty interesting. We looked at this, a few months back when, having been in this fantastic weekly trend, we hit that really lovely double top there, followed by a kind of real sort of what I'd call a ski jump in terms of we just dropped our way down and we had continued to work our way down, okay? And I thought we might get down to the sort of $500 level that we can see has acted as resistance and support before. But invariably what we saw is that, this is that kind of war off, risk on move that we've seen throughout April. And actually what we've seen is that price, rallied its way up. Intriguingly, last week, okay, it's an inside bar. It's I would call that as a momentum pin bar, as in, it's basically it's supporting the momentum of the last few weeks. Okay, we've been bullish the last few weeks. That's the wick is to the downside. Here we are underneath 700. Okay, at the 50 period moving average, but we're an inside bar. Remember, inside bar, it's like the rest before the surge, and so the reason it's of interest to me is because, of course, I'll be intrigued to see what happens with the with Meta later this week. Okay, so for those of you who love all the fundamental elements here, okay, certainly for Meta, they're still spending aggressively on AI, which kind of drives that long-term narrative. The ad revenue kind of remains resilient. All right, the market positioning is still heavily long. Okay, but you also do have to wonder, is that kind of a crowded trade? All right, is that risk building at those kind of highs as it pushes towards there? So my view is, we are back at that 50 period moving average, and what I'll be looking forward to see is, do those numbers coming out on Wednesday, all right, are they enough to basically fuel us to go back up to those highs where we saw that double top underneath $800? Or if those numbers, if there's any kind of disappointment on them in terms of return on investment for AI or growth in ad revenues, etc., if that weakens, well, then does that 50 then flip into being resistance and we sort of drop back towards the 600 level? So we're at an interesting point, and as I said, the numbers might well be the catalyst for the next move later this week. Next up is Microsoft. Okay, once again on the weekly chart. Okay, so we looked at this a few months ago, once again, because we had been in a fantastic run. We had the fall back to the sort of area of the 200 period moving average. We then put in that was the sort of tariff tantrums, big engulfing candle, key reversal candle, pushed our way up, and then we put in this almost picture perfect UTB 123, unequal top and bottom, double top there. Okay, we looked at beautiful double top before working our way down to the 50. Then flipping the 50 period moving average, okay, from being support to resistance, coming down to the 200. And so this is where I started to get interested. This is what I call the monger, which is, looking at for stocks like this, is this a place to be buying at the weekly 200 period moving average? And interestingly, we actually kind of worked our way beneath that 200. But as you can see, the week before last, we had that kind of real proper bang push up there, back up above $400. We've not been able to get back up above that weekly 20 yet. And once again, they are reporting on Wednesday evening. So naturally, just like we talked about with Meta, people are going to be interested in, spend on AI, growth from their products. Okay. I think everybody, this is a personal opinion. I think everybody's a little bit hypersensitive to any kind of slowdown signals in AI spend. Okay, they have spent a fortune on capex. Okay, for AI infrastructure. So of course, people will be interested to wonder, have they spent too much? All right, is that going to have an impact on near-term returns? But the thing about Microsoft is that, it's still viewed as kind of leadership, all right, quality leadership in that whole Mag 7 in that technology space, all right, and so that leadership status it allows it to maybe buffer or sort of buffer the wins a little, but equally it means expectations are quite high on Microsoft, and so if the earnings or the guidance misses, well then it could get punished quickly. So once again, it's not been able to get above that 20. I would hope that good numbers pushes up above 20 and back up towards that 50 period moving average. If we get, as I said, if we get earnings or guidance misses, well, then I'll be looking for a drop down to at least $400 there. Okay, so as I said, once again, that was last week was a bit of I'd call that a spinning top, bit of indecision. People are waiting for the numbers to see if that can be the catalyst for the next move. While there are lots of tech firms sort of reporting this week, lots of interesting ones, there are also on Friday a couple of the oil companies, okay, and in particular, this is Chevron, CVX. We've looked at this a few times this year. The first time was here, okay. What happened there? That was we were into start of January. This was the kind of Maduro operation in Venezuela, and we can see how basically price gapped up, came down, filled it, but then really it has been in a tear since then, okay? Absolute tear, because it had spent a lot of the last few years in that range between $140, $170. You can see for yourself, nothing really of interested. This is, when I see price and moving averages all together, all wrapped up, I'm not really interested. Okay, what you're looking and waiting for is for basically, it's almost like price is coiling before it breaks out. But I don't think anybody really expected it to break out so strongly. But like Echo and the Bunnymen sang in the 80s, nothing ever lasts forever. And what we had here, interestingly, as we went into the war in the Persian Gulf, okay, and actually what we've seen is that that optimism of kind of war off risk gone, and we saw that that's a big weekly bearish engulfing candle there, isn't it? And we have followed our way through. And then last week, okay, we've printed, I would look at that personally as a kind of inside bar, bearish pin bar, bearish rejection candle. But once again, it's almost like the rest before the surge, okay? And so people will be looking for, well, what's gonna create that surge? Okay, well, we've got the Iran situation. We've also got central bankers speaking, and of course, as I said, we've got Chevron and Exxon on Friday. So not unsurprised with Chevron. That oil price at the moment, that kind of the direction of that remains the sort of the kind of dominant driver. So geopolitics, supply constraints, okay, they will all have their impact. Not unsurprisingly, okay, people are going to be interested to look at, well, how disciplined they are with their employing their capital. What kind of shareholder returns are they likely to provide? Will it be in terms of dividends or buybacks? And is the energy sector kind of lagging the sort of broader equity run, which we'll see when we look at the kind of indexes at a moment. So Chevron, not unsurprisingly, trades as a bit of a proxy for crude. So if you're watching Chevron, you need to be watching oil closely. That's pretty self-explanatory. All right. So my view would be that the equity upside is kind of limited without there being an overall sustained energy breakout. And then you'd be looking at, well, what would drive that sustained energy breakout? For me, that would be the collapse of the ceasefire, okay? The collapse of any sort of peace deal, and we go back to war. That would be the sort of thing that might break oil out to the upside. But if we get the opposite way, well, then we would see perhaps, prices both of oil and Chevron drift its way back to that range. Next is Caterpillar, okay, and this has been just a great trend. This has just been a great chart, okay, for years, but accelerated over the last year. As I said, this is a great weekly chart here, okay, and as you can see from, once again, we had a bit of a Munger setup here at the old Trump tariff tantrums, and then we just launched ourselves into this fantastic run here, okay. This has been a great run here on the weekly chart. Not unsurprisingly, Caterpillar, strong exposure to global infrastructure and construction cycles. All right, so they're going to benefit from fiscal spend. Well, if you're going to have wars in places, you're going to want to rebuild infrastructure, and for that you need some trucks and you need some diggers, and the best people for that, well, that's Caterpillar. Okay, so it is normally a bit of a cyclical name, and it is sensitive to kind of those global growth expectations. But as I said, I think that if you're going to be rebuilding the Middle East, you're going to need some diggers, aren't you? So people will be interested to see how that plays out. Certainly, you can see, okay, that it's interestingly, whereas we just looked at oil, where you had the sort of war off risk on, brought oil down. It's actually pumped Caterpillar to highs. We're above $800. Okay, we're up there, aren't we? That is just quite some move. Okay, so naturally, people are going to just be interested to see, are there still good growth expectations? Okay, if there are, I think the price carries on. If there is an overall downturn, if overall growth expectations kind of roll over, well, then I think we could see sort of, Caterpillar reprice pretty quickly. But at the moment, that is just a great stock and a great trend. Okay, and as you hear me say all the time, your job is, when you find good trends, which don't happen as often as you like, your job is to ride it, not try to fight it, just try and find a way to ride it. And as I said, Caterpillar has been a fantastic trend. Finally today, before we switch over to the live markets, this is GDX, okay? So it's the VanEck Gold Miners ETF, all right? So this is, it's like a leverage play on gold, benefits from kind of rising gold prices and dollar weakness, okay, generally. Because it's miners, well, you're looking at things like cost pressures. So energy, all right, if energy and labor becomes expensive, well, that has an impact on margins, all right, and even if there's higher gold prices, those cost pressures will have a big impact, right? But not unsurprisingly, as you can probably see, over the last couple of years, gold and gold miners in particular have been a bit of an interesting hedge against that kind of geopolitical risk, potential rate cuts, etc. But let's just look at the charts just a little bit more, because, as I said, sometimes there's interesting elements we can learn from. You can see this weekly chart has been a fantastic trend once again, okay, just riding that. But what we got here into the start of this year was, that is a big bearish engulfing candle. It's a big bearish key reversal candle. Price pushed to a new high, but it rolled over and closed beneath the low of the previous candle, all right? They don't happen very often, all right? They don't happen very often. And as I tell people, there's no guarantees in trading, but if you're going to look for a good, simple candlestick to focus on, to analyze and trade, well, then key reversals are very good ones. And as I often say, if it's not the top is nearby. And actually, what we saw was, as we went into the war, we did flush a bit higher, okay. But then what happened is we printed another one, okay. We printed another bearish engulfing candle, bearish key reversal candle, pushed to new highs, but then rolled over and closed beneath the low of the previous candle. And then we fell away. Okay. Then we had basically war off risk on, back up to that sort of $100 level. But I wonder now, last week we kind of drifted lower and kind of just closed beneath that 20. And I'm kind of curious to see, is this a not a pretty head and shoulders pattern, but it could be, a head and shoulders pattern on that weekly chart. And I'm curious, we've got the 100 number, we've got that 20. Is that 20 going to flip from being, from having been support to now becoming dynamic resistance? in which case then I'll be looking for price to work its way back down to this level around about $80. Okay, so this is what we need to do with this is, of course, you're watching to see what the dollar is. You're also looking at what kind of real yields are like, because if dollar and yields fall, well, GDX can accelerate quickly, okay, versus the spot gold price. So we are in an interesting point here. It's an interesting decision point, and as I said, we're always looking to see what's the catalyst to move us, whether that be higher or lower. Sometimes it's abundantly clear which way it's going to go. Other times you're like, well, I need the catalyst. I'm going to see how it plays out, and then I'll look to join the trend afterwards. Okay, I generally, I know my style. Okay, if unless it's abundantly clear which way the price wants to go, I'm generally quite happy to let the market play its hand. Okay, make its move, and then I'll sort of try and ride its tail coats. Okay, coattails afterwards. That's the way I like to work with that. Okay, so that was the look at the charts of interest. So what I'm going to do now is we're going to switch across to the live markets, okay, and have a little look at the indices and the currencies. So just bear with us a second. Let's see if we can bring this up. Boom. All right, I'm going to just put this on to let's go to indices, because it is fascinating to see what's particularly going on. We can load that up and take a look. We've got so many chart packages running this morning. Okay, just always takes a little while for it to catch up. But as I said, kind of an interesting week there. Okay, lots going on this week. Lots been happening, but equally still lots going on in these markets themselves. So here we go. Let's have a look at these STAM indices. What have I got here? Dow on the weekly, NASDAQ on the weekly, S&P 500 on the weekly, Russell on the weekly, FTSE on the weekly, Nikkei on the weekly, DAX, and then oil on the weekly. Okay, we just looked at Chevron, etc. Oil still is beneath $100. Okay, and I think if we do get more, let's say more talk about extending the ceasefire, I would expect that to sort of drift oil lower. But what we're interested in is, despite another assassination attempt on President Trump at the weekend, and the sort of ongoing shenanigans in the Middle East and a whole host of other things, we still have managed on NASDAQ, on S&P, and on the Russell to basically still to push and to close at new weekly all-time highs. And the same with the Nikkei as well. Okay, the Nikkei has done that as well. That's the fascinating thing about these markets, is that to be able to see what's been going on, to see all of the kind of geopolitical shenanigans that are happening. But even in that time, you can see that kind of war off, risk on, peace trade has just pumped those equities and those indexes to, as I said, to new all-time highs. The Dow has been tickling the soft underbelly of 50,000 again. Okay, is yet to close its way higher there. If we look at a little bit closer to home, what we've got with the DAX is the DAX printed. Once again, it's another inside bar, spinning top, a little bit of indecision there. Okay, we're above the 50. But as you can see, in the way that the American indexes, okay, most of them have pushed to new highs. That has not happened with DAX. Yep, it's had a big rally. It's back up above the 50 and a little bit above the 20, but it hasn't had that kind of the leap that we have seen in those American indices. And the same close to home with FTSE. Okay, having been in a great trend, we printed that bearish key reversal there, big bearish engulfing, fell away, pushed up, but we couldn't form a new high, could we? We've kind of worked our way down a little bit lower there. And as I said, we've got political shenanigans here in the UK. We've got mixed economic news and data, okay? And then, of course, there is the sort of look at and the view from the Bank of England in terms of what direction are they likely to be taking with the rates. Are they going to hike, or are they going to cut? Okay, so the FTSE has certainly not been able to follow through there. If we look at one or two of the other commodities, gold, well, interestingly, once again, last week, what was it? Another inside bar. As I said, bit of an indecision. You might say it's a bearish inside bar, but there's good sized wicks to either side. I'd be saying that's a little bit of a spinning top, bit of indecision. Everybody's kind of just waiting to see what happens this week. You go down to that daily chart, you've got the 20 beneath, the 50 above. And if you really look for the last few weeks, it's kind of mostly just been kind of going sideways there on gold. Has nothing really terribly exciting if you're looking to be a, let's say a sort of a swing trader in gold. Silver had been interesting because silver had pushed its way up above 50, but once again, what was last week's candle? Inside bar, bearish, but a little bit of indecision going on there. If I go down to the daily chart, yeah, we got up above 80 and we were there with the 80 and the 50, but we've come back down and price is squeezed there between the 20, between the 50, a little bit of indecision on Friday. You hear me say it all the time. When price and the moving averages all come together, it's like it's the calm before the storm. It's like trying to push two north ends of magnets together. They kind of basically push themselves apart, and that's what we're seeing there. I think in that silver and gold and a few, oil and a few of the others. As I said, there's an awful lot of indecision, an awful lot of people just holding fire until they get some clarity on what the next move is. Before we look at dollar, okay, Bitcoin in the weekly, we talked about it, how we thought we're building a little bit of a base, a little bit of kind of coiling up, bit of a symmetrical triangle, and we've pushed our way a little bit higher over the last couple of weeks. You can see that on the daily chart working its way up there. Personally, all right, I'd be saying, I want to see it up above 80, up towards the daily 200. That's, that just gives us that indication of that. But I think some of that is also to do with risk sentiment and also the sort of the dollar itself. Okay, so as always, I appreciate I've run over a little bit, but that's because there's always lots for me to talk about at the moment, lots for me to share with you. So we'll have a little look at the dollar, look at sterling. Okay, as always, we always look to finish at sterling. Just get these charts to come up. As I said, there's always plenty going on here at the with all my different charting packages, okay, that everything's running at the moment. So let's just bring that up and then we'll take a look at dollar. Okay, so here we go on the dollar, Aussie on the 4 hour, Euro on the 4 hour, cable on the 4 hour, dollar Swiss on the 4 hour, dollar yen on the 4 hour, dollar CAD, Kiwi dollar, and then dollar index. Okay, so I have them like that so I can get a good view of the overall sort of sentiment for the dollar. But whenever I'm looking at FX, I'm always going to start with the dollar index. This is the dollar index in the weekly chart. We talked about it. Couldn't get above 100. This is here. This is kind of war on, risk off, and then here we are, war off, risk on. Once again, what did we get last week? Inside bar, spinning top, indecision candle there. Okay, the 20 and the 50 are also there. We go down to the daily chart. Intriguingly, I was looking to see whether, it looked like we were maybe tipping out a little bit and we worked our way up. But, once again, look at the daily chart. You've got price here. You've got the daily 200, the daily 50, the daily 20 coming down, all wrapping up together. As I said, it's kind of like the calm before the storm, and we've got lots to go on this week that, as I said, will be the catalyst for the next move in the dollar. That's what people are looking for and expecting. If I go down to the 4 hour chart, well, if you look at that, kind of we gapped up a little bit, but then once again, we've just kind of worked our way down here from last night into this morning. Okay, going into that US session, that is dollar weakness. That's war off, risk on sentiment. That's the way I look at it. If I look at even on the 30-minute chart, really it's just been working its way lower there, hasn't it? That is kind of war off, risk on sentiment. That's the way I would be looking at that. And that's reflected elsewhere. Okay, so you've got here 4 hour chart, Aussie strength, dollar weakness, even Kiwi dollar strength, dollar weakness, Euro strength, dollar weakness, Canadian dollar strength, dollar weakness, yen strength, pound strength, dollar weakness, Swiss franc strength. Okay, so that's what we're looking at the start of the week. That is kind of the that sort of Iranian proposal has got everybody sort of a little bit giddy in terms of the war off, risk on mentality there. That's what we're seeing with the dollar. All right, and let's finish with sterling. So I've got cable, euro sterling, pound Aussie, pound Canadian, FTSE, pound Kiwi, pound Swiss, pound yen. Okay, That's what I want to be looking at. It's a bit of a scrappy morning session, very bearish morning session, mostly for sterling. But pound against dollar swings. As I said, this is kind of war off, risk on. And even though sterling data isn't great, this is more a case of that kind of dollar risk off sort of move, and that's what we're kind of seeing there. I was looking to see here in the daily chart, where we're going to work our way lower, but bang, that is that is just dollar weakness. I don't think that's any real love for sterling. I just think that is I think that's just dollar weakness. That's what we're seeing there. Okay, yeah, bang. You can see last week was scrappy. Remember, we've got all that political shenanigans going on with sterling, and then, as I said, this is kind of bang, risk off, right? War off, risk on. There you go, WORO. That's what we're looking at there. That's what we're seeing there with cable. Pound against Japanese yen as well has been strange price action there. I was looking at it here. Yeah, we were looking at it last week, weren't we? This is the 4-hour chart of pound yen. I was talking about how it was just kind of hugging, sat on the 50. All right, sat on the 4-hour 50. Interestingly, like a couple of big engulfing candles there, okay, key reversal candles, looking at, well, is that is that sort of what's going on with Japan? Is that what's going on with Keir Starmer's future? But actually, we can see once again that is risk on, risk off, isn't it? Risk on for the pound, risk off. Risk on in terms of sterling strength and yen weakness. Okay, yen's bottom of the STAM. Pound against Swiss franc. This is the weekly chart. We flushed the lows, okay, at the start of the war, and we've just worked our way up. And the Swiss franc, the SNB have come out and said that they've been doing their own manipulating. That's why, if we look at those charts, that's daily chart for the last 6 weeks or so. Not pretty. If you're a swing trader, you're looking at that. You're being between the 50, between the 200, and you've got the 20 there as well. Yep. We're pushing a little bit higher. Maybe that is, as I said, that's kind of risk on mentality there that we are seeing. Comdols, all right. Pound against Aussie. Sterling up, sterling down. All right. Okay. Last week we're going a little bit sideways. Okay. And as I said, I think that's just that is just an indication of kind of people scratching their head over sterling. All right, scratching their head with it. Pound against New Zealand dollar on the weekly chart. We are sat above the 50, but once again, if I go down to the daily chart, I had been looking at here on the daily chart, were we building this? Were we building a cup and handle? That's what I was looking at. Okay, that's what I'm looking to see whether that particularly plays out, and that would indicate kind of some sterling strength and Kiwi dollar weakness. Yeah, I'm not sure how much that plays through at the moment, and even pound Canadian dollar. Okay. If we go to the daily chart for the last week, we just sat above the 50, aren't we? There, we're just going sideways. All right, it's a reflection of, as I said, on the weekly charts, lots of spinning tops, lots of indecision candles. Look at that 4-hour chart, pound against Canadian dollar. All right, you've got basically the 50 coming down, you've got the 200 coming up, price just coiling up. All right, in between it, you've got the Bank of Canada on Wednesday, you've got the Bank of England on Thursday, you've got FOMC on Wednesday night, you've got the Iran situation as well there, and I think that is probably a good place to end, just reflecting on how price has just gone sideways. Everybody's just waiting to see what the scores and the doors are before they basically look to make their decisions. Okay, and what's the next move and what's that next direction. Okay, there we go, ladies and gentlemen. Let's draw it to a close there. I hope that's helped you. I hope that's given you a little bit of insight. It is going to be a busy week, okay? So make sure you're on top of your risk management. Make sure you're on top of the news flow, and make sure you're on top of the order flow. I hope you have yourselves a fabulous trading week, everybody. And as I said, we will not be here next Monday, but we'll be back in 2 weeks' time. And I will see you then. Trade well, everybody. Cheers.